What's up, traders? Matt from the Trade Brigade here doing a technical analysis on our FANGMAN stocks. That, of course, stands for Facebook, Apple, Netflix, Google, Microsoft, Amazon, and NVDA. Let's kick things off with Facebook. Of course, on the left-hand side, we have the daily time frame, right-hand side, the 30-minute time frame. For now, we do have a daily hammer candle that has been produced. It's also back above this breakdown point at 190 even, which strikes me as being slightly more bullish than bearish. The fact that this has unfolded on today's session after a breakdown of yesterday's low, there was clear potential for this to turn into a lower high and just continue to keep us on this downward trajectory, but the buyers really stepped up into the afternoon session and closed it right back up at the highs of today's session, and more importantly, inside of yesterday's range. So it's not a complete win for the bears, but please just don't forget. I mean, obviously, it goes without saying, this thing's been in a bear trend for quite some time, so the overarching theme, sure, we're definitely in a bearish context, don't get me wrong, but from on a bar-by-bar and psychological perspective, the buyers put up a decent little fight today. So with that being said, let's take a look at the 30-minute intraday time frame to see what else we can learn about the price action here. A pivot point that I really need you to have on your chart is going to be this one right here. You can clearly see if 195.50 breaks, it's probably a rotation to the resistance trend line and potentially higher after that to the flush point from here around 202.50, right? We know that that's been an important level for quite some time. It was the bull flag that failed on the daily time frame, so we're looking for a back test of that level if we get follow through up and over today's highs, and again, that pivot at 195.50. If we reject here and get something that does this, I would just be careful in this overall range. There's not a whole lot of structure from an intraday perspective, like clear shelves of support and resistance to pay attention to. I would just overall watch for rotation to here, which would certainly start to put into play a short-term head and shoulders, right? There you go. There's that sort of pattern. Here's your neckline. If we break 190, easily to the low here at 186, if not lower after that, just to continue our daily downtrend. So there's a couple of scenarios to watch out for into tomorrow's session. And again, to keep it simple, lean on longs up and over 195.50. Look for shorts down and out underneath that level 195.50. Ultimately, the flush of the neckline from that head and shoulders we just looked at could roughly be 191, 190. That general area, that's where the more aggressive shorts can kick in. All right, so that's Facebook in a nutshell. Next up is infamous AAPL. APL, there we go. 2 A's, 1 P, 1 L. What do we have on the daily time frame? 2 equal lows, so there's potential that this starts to turn into a short-term double bottom. On the 30-minute, we can see that even better if I zoom in here. So this is kind of that activity right there. Obviously, your neckline is way overhead, around 162.50. I'm not saying we get there on tomorrow's session, but what I am saying is if for some reason that we do find ourselves there, right? Again, this is not a guarantee, but if we find ourselves there, then maybe this is a 30-minute double bottom to reverse the trend on the daily and begin potentially a move back into that resistance trend line, 167 over the course of time. Another scenario could be something like this, right? Don't forget that this could also be traded as a range. So if we make it to the top, watch for resistance here. Any bearish patterns on an intraday time frame, so double top could look like a head and shoulders, right? Something that does this. Maybe it's a short trade to just play ping pong in the range here if you see this sort of context start to unfold and the broad market is bearish as well as we're coming into that inflection point. So 162.50 is the level to the upside. Because we're close to the bottom, if we get anything that does this, higher lows equal highs, setting up an ascending triangle, that's where you take the break to get here in the first place, okay? So anything that continues to hold the double bottom level around 157 and puts in an intraday bullish pattern, look for longs out of that pattern to the top end of the range here. Obviously, anything that starts to break down underneath 157 changes the story, and we're really looking at the invasion low from last Thursday, it's 3 Thursdays ago now, at 152, right? So that's the downside. Again, based on today's activity, the long lower wick that we have, the buyers did put up a solid fight here. We'll ultimately see if that holds on any pullbacks and we produce a higher low, okay? That's Apple in a nutshell. Next up, we have N for NFLX. Netflix loading up here. What do we have on the Netflix chart? An inverted hammer on the daily right after an indecision doji. This chart is not nearly as, I don't want to say bullish because the charts we've looked at so far aren't necessarily bullish, but the buyers did not do nearly as good of a job today in Netflix as they did in Apple and Facebook so far. So on the 30-minute time frame, this becomes really, really clear. You can just see that we're stuck in a range right here, right? So I would be patient in Netflix. Note that we're kind of at the midpoint of the range. Whenever you're at the midpoint, let me draw that one more time. Whenever we're at the midpoint of the range, that's really not where your edge exists. Your edge literally exists at the edges for breakout or mean reversion, mean reversion or breakdown rather at the bottom end. So I would be patient for that. We also know that this 352.67 level is a really important daily flush point, right? So it's the low from here, here we crack it, then Resist. Wow, that word always throws me for a loop. I'm thinking reject and resist at the same time, and it gets me every single time. So apologies for that. But anyways, there's the rejection, there's the weak close, right? So this level is fairly important. If that cracks, it definitely keeps Netflix in quite the bearish position, looking for more follow through to the downside and just daily trend continuation. Now, if we break the top of the range, what's the target going to be overhead? And let's start looking at that, right? So you can clearly see there's the top of the range, 362.30s. If that gets taken out, look for this, 376.80. And the reason we're calling that level is because it was prior support. And if we scrunch out the chart a little bit more, there we go. Resistance, support, support. We didn't quite get there on this back test, but you get the gist, right? There's a lot of technical history at that level, so that's where we're looking, okay? You could even call a little bit of an an intermediate resistance here at 371.68 as well, just based on this prior resistance where the bear flag took place, right? So that's the upside in Netflix. We talked about downside. Let's continue along and get into the G, so GOOGL for Google. What do we have going on this chart? You can clearly see 2 days of balance, and this chart is unlike anyone that we've seen so far. An inside day. Netflix was close, but it technically had a lower, I believe it was a lower high, or a lower low, or higher low, excuse me, there we go. Anyways, no doubt about it, Google inside day here. So what that means is you're just basically waiting for a break of the outside bar that contains it. So if we take out the 2-day highs here, which again, based on the structure that's unfolded, green bars back to back, right at the bottom end of the prior balance. If that happens, look for the top of the prior balance, which is here. Let's throw that on at 27.25. That's the upside trade. And you can wait for, you can play that two ways, right? On the 30-minute time frame, here's a couple of scenarios for you. If we consolidate here, fine, take the break. That's a bullish move, right? Getting price acceptance at this level, I would want to see it above the afternoon pullback today, 26.45. Anything that holds then breaks. Fantastic. Look for longs. If you're a little bit skeptical of that type of move, then the next play would be, okay, it breaks, it pulls back, and it forms a higher low above that level. You can either get it on the pullback or the break of that high for continuation to the top of the daily range. Okay, so that's one way to play Google long. If we stay in this range and actually break down, that's where I would just be careful. I wouldn't necessarily look for the short all the way into 26.20, the low of the 2-day balance here, essentially. Just simply noting that there's been relative strength, right? So maybe if the broad market's like completely rolling out of bed, going to hell in a handbasket, you would target this low. But to me, this looks like more of a bullish opportunity for the 2-day high breaks after the inside bar and bullish consolidation for some type of move that would look like that. So that's Google in a nutshell. Next up, we have M for MSFT, Microsoft in the FANGMAN. What do we have going on in Microsoft? Inside bar again. So nice. 2 of them in a row. It's going to make my job really easy. Obviously, we're just being patient and waiting for a larger break of either the top of the outside bar or the bottom of the outside bar. Notice that the 2-day lows stack up nicer than the 2-day highs, unlike what we just saw in Google. So if we zoom in on this, here's a couple things to be thinking about, right? So obviously the 2-day lows are here. We'll put that on so we're aware that will act as support, especially noting that it was the lower high from the afternoon here on Tuesday. So that level is very nuanced at 280.85. If a deeper pullback does occur and we never make it to the top of the 2-day balance, the outside bar here, then that's your target, right? But it would also require a breakdown of this at 284. So there's a $4 short trade available here if we fail inside of Microsoft, noting that we're breaking down underneath this pivot, right? Prior resistance, which then acted as support right here before the run, resistance this morning, break it into the afternoon, starting to hold above. So 284, if it breaks, 280, and then after that, more patience, I would probably watch for a lower high and then a reattempt for the larger flush of the 2-day range to get us to 275. So something like that could unfold on the short side, but again, based on the activity today, based on the fact that we came in hot and heavy to that low and then rebounded so strongly, got nice consolidation into the afternoon, I would be patient. A break of today's high takes us to the outside bar high. Okay, so 286.50. If that happens, start to target in here, 289, let's call it 290, okay, just for round number's sake. More importantly, the 291 quarter mark is coming from in here. That could ultimately be the target. It might be there instead of right here, okay? So just be aware that obviously that will act as resistance, but more of the magnet is overhead at 291 quarter, all right? That's what we've got in Microsoft, both up and downside. Again, because we're slightly further off the high. If we need relative weakness tomorrow, Microsoft might be a name to look at. Let's continue along and talk about AMZN for Amazon. What do we have in the beast here? It's no longer going to be the beast. Someone made that comment and I thought it was funny, right? We call Amazon, last but not least, the beast just because the price point on this bad boy, it's so high. But obviously with the split news, it'll be going and get cut right back down to size. Roughly what is it? It's a 20-for-1 split. I don't know. My math isn't that great, but let's call it somewhere sub 200, right? That's definitely going to be well within trading range for many people now. So that being said, Amazon, what's going on from the daily perspective? Indecision doji are right in this range holding. a decent chunk of the gap up, right? So to me, decent little strength here. Obviously, the question now becomes, can we break up and over that level, 29.85, for the rotation to the top of the range here? That's 30.95. Or do we stay in range, get more balance, or do we break down underneath the lows, right? So this is a very easy setup here inside of Amazon, just waiting for a move outside of this area, right? And if we take a look at the 30-minute time frame, it's going to make our job even easier because there are some warning signs that we'll get, right? If we just think about that, and compress today's range into a little bit narrower of a range, we're already starting to see a look above, there we go, look above and fail on the intraday range. So that to me would strike me as, okay, maybe it's likely we get the move all the way to the low end of the range, not the low of the day, but the low end of the intraday range at 29.06, and then we play ping pong. If we break the top again, that's your heads up signal to say, okay, it's probably longs up and over 29.85 for the rotation here. If we break down, obviously, bounce off of today's low of day and then form a lower high underneath the low of balance, that's your signal to fill the gap down below, right? So there's a couple of things to watch out for here inside of Amazon, but follow these levels, right? If we start to form this breakdown with the lower high outside of the balance and the chunk of today's value from in here, that's obviously a bearish indication. There's your gap fill. And just like we pointed out to the upside consolidation back above today's range, that's bullish acceptance higher, look for the breaks and rotation into the top of the daily range, 30.95, okay? So that's how I'm going to look at Amazon into tomorrow's session. It's Friday. It's obviously weeklies, so Cheapy Friday on Amazon tomorrow. Should be interesting, fun to watch. And let's round out our FANGMAN with N for NVDA, NVIDIA. What do we have going on in NVIDIA? From the daily perspective, hammer candle on today's session, same sort of theory applies to as what we talked about in the S&P 500, right? We talked about in the broad market video today, the fact that the sellers were not able to materialize underneath the low here. Remember, that's a fairly nuanced level. Sellers break it underneath, we get a back test and then a little bit of a higher low here. That shouldn't have happened, right? If the sellers were going to be firm, it would have been a back test and then a equal low, if not lower low, for just trend continuation. This would have held as the daily lower high, something that continues this little trajectory right here. But with the hammer candle now, there's certainly potential that if we can take out this level right here, today's high of day, that's a trigger from the daily hammer bar setup, then you're looking for the long here into 233.60, right? That's just obviously the back test of the bottom end of this range and also roughly yesterday's high of day, okay? So that's what we've got to the upside. Obviously, if it breaks after that, you're looking at rotation here over time, but the resistance trend line could certainly stand in the way, roughly 240 for tomorrow's session. So be aware of that, but a stronger move inside of NVIDIA over time could look something like that. I suppose more realistically, if we take out yesterday's high, maybe it's this, and then next week we get something that does this, and then indecision doji here, and then continuation higher. I don't entirely know. I'm obviously speculating here, but that's if we get a break of the hammer high in the first place. If we roll over, it's not bearish until we crack back down underneath that 222, form a lower high, and then break down underneath today's low of day for the rotation into 209. Okay, the equal lows down here, that would certainly become an interesting daily flush point with 1, 2, 3 if this unfolds, right? 4 touches after multiple successive lower highs. That's an interesting short, right? 209, a larger move could develop inside of NVIDIA if we test it one more time off of a lower high. But again, based on today's psychological component, the fact that the sellers failed underneath yesterday's low of day, the nuanced prior high of day, it doesn't strike me that the sellers are overwhelmingly firm here inside of NVIDIA. The buyers seem to put up a decent fight. We'll monitor really for the long-sided trade that we pointed out earlier. So that's going to wrap up our FANGMAN companies. If you enjoyed today's video or learned anything new, let me know in the comment section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.